Hello everyone, it's James here. It's Thursday morning. Let's do a quick rundown on natural gas amidst this war going on in the Middle East. With 20% of the world's shipping affected by any disruptions in the Straits of Hormuz and some uncertainty around all of that still. But it seems like the Iranian Navy and with that the mine-laying ships have been eliminated. If that's true, then perhaps there's a little bit of relief for these prices. Let's have a quick look. I'll start with natural gas. This is the one that we've just taken a new position on. We got long at the retrace. Simply down to the Fibonacci retracement level, the top of the order block, the market structure break, the 50-period moving average here on the 4-hour chart, and just below the point of control. If you look at the same picture on the day chart, it doesn't look all that fly, actually. This is where we got short at the top. This is where we got long at the bottom. But notice that we have a reversal pattern here on the daily. After having pierced the 20-period moving average, failed it on the first attempt, failed on the second attempt, that was yesterday, and you might say failed again today so far. Nevertheless, we have a long position on, and it's a small one, and I'm willing to add. Let's go back to the 4-hour chart. And you can see here we've got to push up through the two moving averages, the 20 and the 100 just above us, but we did hold the 20 and the order block and that miniature point of control on the chart, and we have bounced out a bit and we are in some profit. And now we must look above us for the targets. First of all, the top of this range where we've now rejected 3 times. We have still not yet closed the tiny little remainder of the gap above there, and we've still got all these other gaps to the left-hand side, 2 weekend gaps and a contract roll gap. So that's where we are. We're long and we're in profit, but who knows what's going to happen next? We've got all sorts of stuff going on in the Straits. This war could carry on for days, weeks, months, or even years. We have no idea what the unintended consequences might be. So all of this stuff puts the mockers on the market in general, but particularly energies and precious metals. So let's see how we go. If we break down through these levels, I'll begin to hedge and we'll have to see how far we can get down. And levels below us might be some of these blobs on the left-hand side. Let me just scoot along. We haven't tested the lower two yet, but we have tested that one on the left. So the lowest one here is about 2.7, but I wouldn't be surprised if we have to test below there, just to drop into the volume gap you can see on the right-hand side, fill in some liquidity there, and then bounce out of there. I don't know. It's going to be one of the two. Either we're going to rally from here, or we're going to have to fill in the liquidity slightly lower down, below 2.7, potentially down to 2.5. So don't put all your eggs in one basket, being the long basket, and be aware that we still have potential downside. This market is not definitely bullish just yet. We're in the shoulder season. It's more likely we'll stay at the current level around $3 plus or minus 20 or 30 cents, I suppose, for the next month or two, being shoulder season. Prices should begin to pick up in May again, but again, with what's going on in Iran and the Straits, we could see an early rally. So in summary, I'm long on natural gas, willing to hedge if we start dropping down through that order block, and looking for a target of 350, 375. Now in crude oil, just to finish this off, we've got 2 charts, WTI on the right, Brent crude in the center here. Let's look at WTI first. I'm short on this one, and I don't know what's going to happen. This is an ascending triangle. Looks like we're going to try and break out through the top. There's a 65% chance of an ascending triangle breaking out higher, but we have not done so yet, and this last 4-hour candle, prior to this one that's just opened, was again quite negative. We've got to get through this top, break up through there, retest from the top side, and then keep moving higher. Some people think oil's going to $100. I think it's more likely to go to $50. But who knows? I'm often wrong. It's not a prediction. It's my assessment of the situation. And if I'm wrong, I'm wrong. And we'll get long or hedged if we break higher. Some people think $100. I think 55. I think the first attempt on a move down will be down to the 50-period moving average here on the 4-hour chart, the top of the weekend gap, and then probably the bottom of the weekend gap at around about $67, something like that. My general idea is that we're going to move back down quite a lot lower, and eventually, let's go back to the day chart, to retest down in these levels at the lower end of the range and potentially even lower. But we'll see how things go. So I've got short positions from here, hedged over here, and I've now put some smaller short positions on at the top here. I'll hedge the entire lot if we manage to move above here and close above here after a retest. And then, maybe we can get a bit higher up into some of these higher order blocks slightly above us, potentially all the way up to $93. But I think we'll struggle to get through this purple line at 75 or hold above there for any period of time. And of course, there are a couple of other swing highs to the left. Generally, I think oil is likely to move sideways to lower rather than much, much higher. Folks, I hope you enjoyed the video. If you did, please like and subscribe. Click the thumbs up, press the subscribe button, and press the notification bell. It's the thing that looks like a bell under the video. And if you press that, you'll get an alert every time I make a new video. Take care. Have a wonderful day.
And the numbers ran wild. Click past 40, 50. Felt robbed like a child. Clerk gave a shrug. Said that's just how it be. I said, I'm done. There's another way for me. Gas prices sky high. gotta see. Gotta get me a cheap